What's going on, guys? It's been a while since my last video, and forgive me, I've been quite busy with my CPA exams, but those are out of the way for a little bit, and the market's been quite crazy. And if you guys haven't heard of the Evergrande crisis, then you should definitely stick around because it may help you save a ton of money. What's up, everybody? I'm Guy Grill, and I'm not a financial advisor. Everything I say and show you guys in these videos is for entertainment purposes only, and hopefully there's some education here for you guys to profit off of and we can all win together. But don't buy anything unless you guys do your own DD. So let's get started. Make sure you guys know everything that's happening in the markets, and by this I mean the economy and the general background of everything, because this will be the foundation of which stock you will be looking at and which stock you may be able to profit off of. So the world's most indebted developer is a Chinese real estate company called Evergrande, and they have accumulated over $300 billion in debt. And Chinese regulators recently cracked down on property developers such as Evergrande due to their high borrowings. And over the last few weeks, Evergrande also warned investors of cash flow issues, saying that it could default if it's unable to raise money quickly. And this company has always been known as too big to fail, but the risk of this has caused many stocks to fall already. And to give you guys a sense of its scope, Evergrande recorded $110 billion in sales last year. It owns $355 billion in assets across 1,300 developments. It employs 200,000 people, and they hire roughly 3.8 million workers every year for project development. So this can impact all of the Chinese middle class, and roughly 1.4 million apartments are sold that haven't even been built yet. And a lot of these have been bought by regular investors like you and me. And let's not forget that the typical Chinese investor, they have 70% of their net worth in housing. So Evergrande disclosed in a stock exchange filing that it was having trouble finding buyers for some of its assets due to China's property slowdown and tampering demand of new housing. So Evergrande is now offering investors real estate in exchange for their debt. So instead of paying cash, they're now giving away their properties, which is pretty crazy because they're liquidating since they have to. And so since their real estate can't sell, if they can't sell, they would have cash, of course. If they did sell it, they would of course have cash. But real estate that can't sell means that they would have to give it for cheaper. So at this point, people will take real estate at a 25% discount. So if the Chinese property values and land values go down, that would severely impact their economy and can send shockwaves all around the world. And this will impact 170 domestic banks in China, 120 foreign banks across the world. So this is a huge spread as to how their debt is working and who will actually be impacted in getting their payments back due to Evergrande's default. Then loans will be harder to acquire. So let's just take a step back. If they start giving their property and their real estate at cheap prices, then that's just another reason for a crash in the Chinese economy. But the Chinese government can't let the economy crash. So what would happen next? The firm announced that Wednesday it would sell part of its stake in a local bank for roughly 1.5 million, which means that they're raising obviously some of the needed capital. But instead of going towards its outstanding bond interest payments, the money will actually be used to settle its debt with that lender, with that bank. So on Thursday, September 23rd, Evergrande was on the hook to pay about $83.5 million in interest payments, and it didn't meet that deadline. And then on September 29th, the company was required to pay an additional $47.7 million. Luckily for Evergrande, they have a 30-day grace period before they default on their loans. So this week also, the Chinese government was signaling that it won't step in to help save that company. So Evergrande does look like it will default on their $80 million of payments. So let's discuss what we should actually do. So assuming the government doesn't bail them out, I'm sure they might do something else. For example, discussing with banks to extend their credit terms just so they're able to make their interest payments. But let's just assume the absolute worst. The government doesn't step in, doesn't give them money, they have no absolute help, and they actually do default on their loans. Then I would definitely recommend rebalancing your portfolios. Don't have a high portion of your portfolio in Chinese stocks, even though I feel like they're so undervalued right now. Like Alibaba is an absolute steal, but just so many different things happening in the market, it might not be a great idea to get into that right now. I would become a little bit more diversified. I wouldn't hold too many stocks in the real estate sector. or even have all of them in banks, because we don't really know how many banks and to what severity they will be affected. You should be finding the opportunities. So like this means having a large portion of your portfolio in cash ready for when stocks fall. You can rebuy them, or dollar cost averaging if you guys have already bought a lot of stocks. Like if you bought Alibaba from before, I would definitely recommend buying it again now at 144 to lower your average. It is at a 52-week low, so I would definitely recommend finding some growth stocks that have had large pullbacks. Don't buy anything near its 52-week high, of course. And this Evergrande situation, although it's big and impactful, it isn't the full reason for the market sell-off. Rather, there's stalemates in Congress on the debt ceiling, which we should hear from very soon. There's worries on policy changes or mistakes in the monetary policy, and the proposed tax increases have all caused investors to become worried. So when this all usually happens, corrections can definitely happen, but I wouldn't really say a correction is going to happen yet, but of course no one really knows. September has always historically been the worst month, so we were prepared for this beforehand. But corrections aren't something to be afraid of if you're prepared for them. So if you're holding on to growth stocks that you bought at the right value, you shouldn't be worried, and always have some cash. So that's all I have for you guys today, and I will be bringing you guys some new videos next week talking about actual growth opportunities and stocks that you guys should definitely be looking at that most likely will not have any large corrections, because they're already sitting at around their 52-week lows, or usually around like a 300 day moving average, or they're near the resistance levels. So definitely remember to check those out. And if you guys enjoy this content, please go smash that like and subscribe button down below, and I'll see you guys next time. Peace.